Okay, everybody, it's me, Gregory Mannarino, Wednesday, May 3rd, 2023, and here we are. Here we are on this lovely day. We're going to hear from the supreme it of its, and I'm talking about the Federal Reserve today. And, turn on Bloomberg, Fox Business, CNBC. It's all they can talk about here. Obviously, you know my take on this, people. They're going to raise rates today. And more than likely, this is going to be it for a while. Then we're going to get a pause, but inflation is going to continue to rise. It's not going to stop. This whole thing has been a farce on an unprecedented scale since it started. Central banks raising rates. They're in the fight of their lives to stop inflation. And what does inflation continue to do? No shock to you or me, because we spoke about this since day one. Inflation continues to rise, and it has nowhere to go but much higher from here. So with that said, again, we will cover the festivities later on during my live stream, 1:05 p.m. Pacific Standard Time. So let's just set the stage here for what is about to happen. So stock trading didn't start for about 45 minutes. Now, with that, I want to touch on some economic news here right off the bat. I mean, this is crazy, but it's no surprise. So we just got this ADP private payrolls or jobs number, which came in better than expected. So, but this is how it's being broadcasted to the people. So with regard to last month, the financial sector and the manufacturing sector, imagine my shock, lost a lot of jobs. Over 66,000 jobs were lost in these two sectors. Now, leisure and hospitality, they want us to believe that we, by some miracle, are adding leisure and hospitality jobs. Okay, lovely and fantastic. What else is going on? Mortgage demand fell again. It's done. Okay, I really feel bad for people that are in the mortgage business right now. They're in a lot of trouble here. I'm moving forward, and we're not done. The other thing I want to bring to your attention, and this came out this morning here, I believe it was on Bloomberg. So once in a while, one of these things from the Federal Reserve floats out a little bit of truth. Oh yeah, and we got some of that today. So ex-Fed President Robert Kaplan, this is what he had to say. Are you ready? The banking crisis is just getting started. Now, you and I, we knew this since day one. Look how they played this out with this whole smaller regional bank things. Okay, obviously it was making headlines all over the place. Then it was fixed. They fixed it all. It was beautiful. It was perfect. And the system is sound according to Powell, and then Bidenstein, and then Diamond. And then all of a sudden we get, yesterday what happened was pretty incredible, and we're not done. We're not done by a long shot. Now, with that said, I want to read something to you that I put out in my newsletter yesterday. This is from right off of Yahoo Finance, and the title was "Half of the U.S. Banks Are Insolvent," and this was my title that I wrote back here. Just half? Let me read this to you real quick. So Lions and Friends, this is what I send out in my free newsletter, free to everybody, link in the description of this video. This is interesting, and it is something we have covered for years, literally. In an article from Yahoo Finance, quote, half of America's banks are potentially insolvent, and I followed up with people. There is no potential about it. The entire banking/financial system is totally insolvent. As you are well aware from this blog here, the entire banking and financial system is totally insolvent. Unbelievable here. The system operates people in a vacuum. It's a perpetual vacuum, a constant state of insolvency, because that's the nature of the beast, the debt-based economic model. But you see, you are not allowed to know that. And according to Yahoo Finance, almost half of America's 4,800 banks are already burning through their capital buffers. Now, according to Stanford University, an economics professor, Amit Suru, he goes, let's not pretend that this is just about Silicon Valley Bank and First Republic. A lot of the U.S. banking system is potentially insolvent. It's unbelievable. Now, this is more unbelievable to me. Okay, so Yesterday's route here with regard to the regional banks, I don't know how many of you caught this, but I did write a piece. Here it is, and I sent it out in my free newsletter. All right. So on live television, they floated out some person, I forget who it was a female, on CNBC to try to convince you of something. I want you to pay attention to this. Ready? Lions and Friends. Just when you thought that it could not possibly get any more insane, here we go. So today, this was just yesterday, the smaller regional bank sector got hammered with CNBC, Bloomberg, and Fox Business commentators trying their hardest to draw attention away from what was going on over there, especially after we heard from Powell, Biden, and Diamond that the banking system is sound. Now let's fast forward to now, meaning yesterday. CNBC on live television was now blaming the weather. The weather, yes, the weather. Blaming the weather, people. So it's the weather which is causing issues with the banks. Go ahead, people, make this up. You can't do it. Now, I think what they were trying to do is see how people would react to that kind of a story. I don't think it caught any traction because I haven't found any articles written about it. But this is insane. And I watched this live, and I'm sure many of you did as well. Blaming the weather on the small banking issues here. You can't make this stuff up if you freaking tried to. Let's go over to the market real quick. So right now, stock futures are slightly in the green, but everything else is red. Red. The 10-year yield again has dropped, okay? This is not a fear trade here. We watched this yesterday. The 10-year yield dropped 10 points. And we got this morning, 10-year yield dropping yet again. The relative strength of the dollar is lower. That's how you know it's not a fear trade, okay? Fear trade, you would see the knee-jerk higher in the dollar. Cryptocurrencies are under pressure. Gold and silver are under pressure. And crude oil is getting hammered. It's down around $69 a barrel. People, in my opinion, I'm just going to tell you this right now. We were just over 80 recently. This thing with crude and energy, I would suggest doing your own research on this here. But commodities and energy is the place to be moving forward. I really believe right now we are on the cusp of something very, very big. I have covered over the last week that this market has a black hole under it, a vacuum under it, okay? And we could potentially see this market drop substantially. Again, I am not joining the choir of crash callers out here. This market has gone pretty much straight up for a while. It needs to drop. We'll see what happens. Yesterday, this market was down. The Dow was down about 600 points. We finished down about 350 or so. A lot of propping up there. And that's what they're trying to do. Watching the 10-year yield drop like this, they're trying to push cash back into the stock market here. Let's see if it works, okay? I believe it's look, something's going to break. The system is breaking. You all know this. I wrote an article recently on this. I sent it to all of you in my free newsletter. The MMRI has dropped again. They're trying desperately to keep this propped up. Is it going to work is the question. I believe, just looking at the current set of dynamics going on here, the issue with these smaller banks is going to start to reverberate louder. I also believe that a few of the larger institutions are also going to start to show signs of weakness here. People, you all know how this works. We've covered it repeatedly. Not only is the entire system insolvent and the entire system works in a perpetual vacuum, from about 9 months ago, we knew the banks were in trouble. You remember? No deposits, no loans, no deals. The smaller institutions are the first to go. They're being consolidated. I believe there's a very high probability that one or two major banks is also going to fail. And this is going to send the stock market into a tailspin. And then, of course, they're going to try to prop it up again. But we're going to see how this plays out again. What do they need? What do they need to institute their new monetary system? What have they been gearing up for, people? They need a major event to occur to get people to beg for a new system. Please help us. Please. They're setting up the problem now here. We're just seeing a little bit of it. None of this is by accident. You all know that. It's all a game. Nothing is what it seems to be ever. Ever, ever, ever. When you see a certain thing being floated out on the mainstream and then covered by all the networks, and they want you to look at that one thing, you know there's something else going on here. Okay? And generally all that stuff that they float out there, it's all fake too. You all know this. Anyway, so I want to hear from you. What do you think about this one? CNBC trying to blame the weather on the banking problem, and this issue with the banking system. Just half the banks are insolvent. They're all insolvent. Strip out their liabilities, and every single, even the super banks, they're underwater. They're all underwater. The entire system operates in a perpetual state of deficit, and that's the way it functions. It cannot function another way. Henceforth, why we have this debt-based system, which is a curse upon the world. You all know that, just like these central banks. All right, people, look, that's it. So we're going to hear from the Fed today. You know my take, 25 basis points, 50 in a massive outlier. I think this is going to be 25. But it doesn't matter. It's not the hike. It's not the hike. It's what comes out of its mouth later, and then we'll see the effects of this over the next day or two. I would imagine this market is going to be volatile today. So just sit back and enjoy the festivities here. Now think about what I said earlier. You got everything selling off right now. You got crude oil under pressure, gold and silver under pressure, cryptocurrencies under pressure here. The relative strength of the dollar lower, 10-year yield down. Stock market right now, as I am doing this again, still remains slightly in the green. Very interesting. I mean, it really is an interesting set of dynamics here. What could be more fun than watching the Freak Show here? And this is an episode of the Freak Show that I think we're going to remember today. All right? I'll see all of you later. Love all of you. People, again, thank you all for supporting my work. Also, you can support my work by giving me a thumbs up. If I covered anything here that you think is important, please, those thumbs up are so valuable. It gets the video out there. You want people to hear this stuff and see it? It's up to you. It's up to you. I'm not on a single social network. I'm on Twitter now. I'm sorry. Yes, I am back on Twitter since Elon, I guess. And so please share the video. Get it out there. Thumbs up. I need these things, and I need all of you. We got each other's backs, right? I'll see you later, 1:05 p.m. Pacific Standard Time.